Everyone thinks Canada's housing crisis is a story about supply and demand, about zoning, about immigrants, about millennials buying too much avocado toast and not saving enough for a down payment. That's the polite version. The truth is darker, because what's happening in Canada's housing market isn't an accident, it's a design, a system built over decades that slowly transformed housing from a human necessity into a national financial drug. And the worst part? Every level of power in Canada, from the banks to the politicians to the pension funds, is addicted to it. They can't quit, even if they wanted to, because the entire economy now depends on one thing: keeping real estate prices high. This isn't a housing market anymore. It's a pyramid scheme wearing a flag. And today, we're going to uncover the secret no one talks about, the hidden history of how Canada quietly turned its homes into the backbone of its economy, and why that choice doomed an entire generation. Let's start with a myth, the idea that Canada is a safe, boring, and stable country. That reputation was earned after World War II, when Canadian banks seemed conservative compared to the reckless chaos of American capitalism. But beneath that calm surface, something radical was happening. Canada was quietly re-engineering its economy to rely less on factories and exports, and more on property values. In the 1950s, Canada was still a country of builders, resource extraction, manufacturing, steel, cars, and oil, real, tangible industries. But as global markets shifted and competition grew, Canada's elites realized something uncomfortable. It's a lot easier to make money by inflating asset prices than by building things. And so, a new national religion began to form, the cult of homeownership. Governments subsidized mortgages, deregulated lending, and flooded the system with cheap credit. The logic was simple: if everyone owns a home, everyone has a stake in the system. But that's the illusion. Because when everyone's wealth depends on rising home prices, no one can afford to see them fall. So, instead of managing housing as infrastructure, Canada began managing it as an investment vehicle. Homes became not a place to live, but a store of value, a financial instrument. And that shift, subtle at first, would end up redefining the entire Canadian economy. The real turning point came in the 1980s. Interest rates were sky high, inflation was rampant, and the middle class was struggling. That's when Ottawa discovered a powerful political truth: rising home prices make voters feel rich, even when they aren't. Think about it. If your home doubles in value, you feel successful, you feel safe, you feel like the system works. Never mind that your wages stagnate. Never mind that your kids can't afford to buy their own home. As long as your equity graph keeps going up, you'll vote for whoever promises to protect it. That's when Canada's housing policy turned into housing politics. The government doubled down on mortgage subsidies. The Canada Mortgage and Housing Corporation, CMHC, originally designed to make homes affordable after the war, transformed into something else entirely: a national backstop for private debt. Every time the banks issued a mortgage, CMHC insured it. Every time the market looked shaky, Ottawa stepped in. The result? Risk disappeared from the system, or at least it seems to. Investors learned they could speculate freely because no one would let the housing market collapse. Homeowners learned they could borrow endlessly against their rising property values. And the banks learned the golden rule of modern Canada: housing always wins. This was the birth of the financialized Canadian economy, where growth no longer came from productivity, but from debt, from ever-expanding mortgages, from rising paper wealth that made everyone feel richer than they actually were. But debt-based prosperity has a catch. It only works as long as someone else is willing to take on even more debt after you. To understand how deep this addiction runs, you have to understand the role of Canada's banks. The Big Five, RBC, TD, Scotiabank, BMO, and CIBC, are treated like national institutions, trusted, stable, respectable. But their real business isn't finance, it's real estate. More than 70% of their assets are now tied to mortgages and property-related lending. That means if housing prices ever fall significantly, the entire banking system could crack. So what do? They make sure prices never fall. Every time the market cools, interest rates are slashed, mortgage terms are extended, and new lending programs are introduced. Every economic problem is met with the same solution: more credit, more leverage, more demand. The result is a self-reinforcing loop. Banks lend more. Home prices rise. Homeowners borrow more against their inflated assets. Banks earn record profits. Politicians brag about economic growth. Repeat. It's a perpetual motion machine powered by debt until it isn't. Because here's the cruel irony: the very thing that made Canada's economy look stable is what makes it fragile. When everything is built on home prices, even a small decline can unravel everything. But Canada's crisis isn't just homegrown. By the 2000s, something else began distorting the picture: global capital. Foreign investors from China, the Middle East, Europe began pouring money into Canadian real estate. Why? Because Canada looked safe. Its banking system hadn't collapsed in 2008. Its currency was stable. Its government was predictable. To global elites, Canadian housing wasn't shelter. It was a vault, a place to park wealth, hidden from volatility and taxes. And Canadian politicians welcomed it. Every new condo tower in Toronto, every multi-million-dollar mansion in Vancouver, every record-breaking sale meant higher property tax revenues, more construction jobs, and the illusion of prosperity. No one asked whether the units were even being lived in. No one cared that wages weren't keeping up. The new national strategy was simple: sell the country's cities to the highest bidder. The result? A generation of Canadians priced out of their own country, forced to rent indefinitely, while the wealth of the nation flowed upward into fewer and fewer hands. By the 2010s, the addiction had become total. The Canadian government didn't just tolerate high housing prices, it depended on them. Municipalities relied on land transfer taxes and development fees. Provinces relied on construction jobs to boost GDP. Federal politicians relied on happy homeowners to win elections. And CMHC? It had become one of the most profitable crown corporations in the country, making billions ensuring the very mortgages that kept prices inflated. It was a perfect political machine, until the cracks started showing. Household debt hit record levels. The average mortgage soared to levels completely detached from income. Cities like Vancouver and Toronto became cautionary tales, places where doctors, teachers, and even tech workers couldn't afford to live. But still, politicians refused to act. Because to fix the problem, they'd have to do the unthinkable: let prices fall, and that would crash everything: the banks, the government's revenues, the voters' sense of wealth. So instead, they doubled down. More immigration, more development, more subsidies, more credit, always more. Here's the part no one wants to admit. Canada isn't a real estate market inside an economy. It's an economy inside a real estate market. Every policy, from interest rates to immigration to infrastructure, is designed with one unspoken goal: to keep property values rising. Even the Bank of Canada's monetary policy, which supposedly fights inflation, is trapped. Raise rates too high and the housing bubble pops. Keep them low and prices soar even higher. It's not governance anymore, it's hostage negotiation. And ordinary Canadians are the collateral. You see it in every rental listing, every bidding war, every rent-evicted tenant, every young couple forced to move back in with their parents because they can't afford a starter home in the city they grew up in. The Canadian dream: work hard, buy a house, build wealth, has quietly died. But no one will say it out loud. Because to admit that truth would mean confronting the uncomfortable reality that Canada's prosperity was built on a lie. This isn't the first time this story has been told. It's just the first time people are starting to listen. In the early 1990s, the Bank of Canada actually warned about the dangers of excessive mortgage lending. So did the IMF. So did countless economists. But every warning was ignored because the short-term gains were too tempting. When the US housing market collapsed in 2008, Canada congratulated itself for being different. Canadian banks didn't implode. Canadian homeowners didn't default en masse. But the reason wasn't moral superiority, it was timing. Canada had simply delayed the reckoning. Instead of bursting, the bubble just kept inflating, fueled by even lower interest rates, even looser credit, and even more foreign money. And so, Canada's housing market entered its final stage, the phase of denial, where everyone knows the system is broken, but no one can afford to fix it. So what happens next? Some say prices will crash, others say they'll plateau. But the deeper truth is this: it doesn't matter what happens to prices in the short term, the damage is already done. Because a country that treats housing as an investment can't build a sustainable economy. Productivity stagnates, innovation slows, birth rates collapse, cities hollow out as workers flee to cheaper regions. And when people lose hope of ever owning a home, something even more dangerous happens. They stop believing in the system itself. That's the silent crisis no one talks about, a psychological collapse hidden beneath the economic one. Canadians are told to be grateful, to enjoy stability, peace, and prosperity. But beneath that politeness lies a deep anger. Because everyone knows the truth, the system is rigged. Let's pull back the curtain one last time. How did Canada become so rich, on paper, without building much of anything? It's simple. Every time a home sells for more, GDP rises. Every time a homeowner borrows against their house, consumption rises. Every time the banks issue a new mortgage, economic growth is recorded. But none of it is real wealth. It's debt masquerading as prosperity. A nation borrowing from its own future to sustain the illusion of progress. And that's the dirty secret behind Canada's housing disaster. It's not just a housing crisis. It's a civilization-level bet that credit and asset inflation can replace real economic growth forever. But history tells us how those bets end. Every empire built on financialization, from ancient Rome's debt-ridden estates to Japan's 1990s bubble, eventually faces the same fate: stagnation, disillusionment, decline. Canada is no different. So where does that leave you? If you're a renter, you've been told you're lazy, that if you just worked harder, you could get on the ladder. If you're a homeowner, you've been told you're lucky, but deep down, you know your wealth depends on the next person's misery. And if you're a politician or banker, you know the truth, that the system can't be fixed without collapsing the illusion that keeps it alive. This is the trap of modern Canada, a country that sold its future for rising home equity. The politicians can't fix it, the banks won't fix it, and the media won't tell you the full story because their advertisers are the banks and developers profiting from it. So the question isn't, when will housing become affordable? The real question is, what happens when an entire country realizes its prosperity was built on a bubble? Because one day, the illusion will break. And when it does, it won't just be a real estate correction. It will be a reckoning, a national moment of truth. Canada's housing disaster isn't about houses. It's about what happens when a society mistakes debt for wealth, speculation for stability, and political cowardice for policy. You were told Canada was safe. You were told it was different. You were told it could never happen here. But the truth, it already has. And that's the secret behind Canada's housing disaster no one talks about.